So we've seen the first interest rate hike in the UK for a decade. The interesting part was not so much the interest rate hike, which was relatively expected, but the commentary around it. And the commentary around it was much more dovish, much more cautious, and as a result we saw sterling, as a barometer of this, begin to sell off relatively sharply in the immediate aftermath. And what we've seen is commentary that really says we're not sure about where the economy is going. The politics and the policy, most notably around Brexit, remains very uncertain. And as a result, we're going to take out the one interest rate cut that we made after Brexit last year, but perhaps you shouldn't expect this to be the start of a meaningful tightening cycle in the UK. So UK politics has been a bit challenging. Obviously, on the non-Brexit side, we've got the budget coming up. The government didn't have a great performance the last time round and clearly would like to produce a better result this time in terms of how their budget has been received. On Brexit, the negotiations, they look difficult. There's not a lot of clarity about what a final outcome may look like. There's not even clarity about whether there will be a final outcome. And as we saw from the Bank of England minutes when they raised interest rates, these things are clearly playing on the minds not just of policymakers like Mark Carney, but also in terms of businesses and consumers, and we've begun to see that reflected in slower GDP growth than maybe elsewhere in the world. So we've begun to see third quarter earnings come in around the globe. And a couple of things that are worth noting. The first is that in general, particularly in the US, we've seen earnings come in a little bit better than analyst expectations. The second is that share price reactions to that have been relatively muted. There have been a few standouts, but in general, companies that beat earnings, they've done okay. Companies that missed earnings, they've done a little bit worse, but the gap is not particularly big. And so we sit here and we wonder to what extent, these good earnings that have really helped to underpin equity valuations and equity performance this year are already being factored in by share prices.